Welcome to another episode of Why Real Estate. The outcome of a presidential election can significantly influence the housing market, depending on the policies and economic strategies the administration adopts. If you enjoy our content, please like, share, and subscribe. Here are some potential ways the housing market might be affected by the presidential election. First, interest rates and monetary policy. The administration's stance on economic growth, inflation, and fiscal stimulus can impact the Federal Reserve's decisions on interest rates. If rates rise, mortgage rates could increase, making home loans more expensive and potentially cooling the housing market. Conversely, if rates stay low, it could encourage more borrowing and home buying. The stimulus package that Kamala Harris cast the deciding vote on shortly after becoming the vice president led to the worst inflation in more than 40 years, which is a regressive tax that most hurts those least affluent among us. President Reagan once said, "We don't have inflation because the people are living too well. We have inflation because the government is living too well." Second way it affects the housing market is through tax policy. Changes to tax policies, such as deductions for mortgage, interest, or property taxes, could affect homeowners' tax liabilities and influence the attractiveness of owning versus renting. Third, housing supply and affordability. The administration's approach to zoning laws, land use regulations, and subsidies for affordable housing can impact the supply of new homes and housing affordability. Policies that promote or restrict new construction will affect housing availability and price. Fourth, economic confidence. Elections can influence consumer and investor confidence. If the election results lead to economic uncertainty or instability, potential homebuyers might delay purchases, and investors might be more cautious, potentially slowing down the housing market. I am of the strong belief and opinion that as Americans we can release economic pressure by producing our own energy. This creates jobs, drives down petroleum costs, which is oil-related costs. Petroleum is refined and used in everyday products like gasoline, tires, refrigerators, life jackets, anesthetics, jet fuel, and more. Producing American energy would drastically increase housing affordability. And the fifth way is through housing regulations. The administration's stance on housing regulations, including rent control, eviction moratoriums, and environmental regulations affecting construction, can also play a crucial role in shaping the housing market. The Biden-Harris administration recently began pushing rent controls as part of their anti-gouging policy. This can offer a short-term and quick fix, but the long-term economic effect can be devastating as rent control discourages investors from investing in new rental housing, and it encourages people to pull their houses off the rental market. The result will be increased rental costs because of the limited number of available units. Affordable housing options can only be realized when supply of houses keeps pace with demand. Overall, the specifics depend on the candidate's platform and the policies they choose to prioritize once in office. Please like, share, and subscribe if you like our content.